What's up, everybody? We are back. It's Friday the 13th, checking back in on these markets. I want to do a quick breakdown of three charts that I'm looking at. Talked a little bit about the S&P 500 yesterday, and in that video, if you go back, I was talking about the S&P potentially catching some support between these price levels right here and catching a bounce up to possibly around the 300 mark. Well, today the market's up 3.4%, so we are catching some support at these levels. If I zoom in, we can see, let me zoom in a little bit more. Here we go. We can see the market fell significantly into these prices yesterday morning, dipped the toe into the price level, tried again, tried again, tried again, and tried again. So we are seeing some support right here, like dancing on this line, this green line here. And this is the same green line I drew yesterday, so I didn't move it. And it's just very interesting as to how the price is reacting to this price level right here. So we're up 3.4% in that market. We'll continue to keep an eye on it and see what that market does heading forward. So if you're looking for a short-term day trading buy opportunity, it might be right there. But again, this market is very powerful to the downside, so I might just wait for a good bounce and then look to buy a put option or sell some positions as it reaches these levels up here. Moving into the GDX, this is the gold mining vector, the gold mining companies ETF. It's a basket of some of the world's biggest gold mining companies. And they're not just gold mining companies. They're metals, minerals, iron, aluminum, copper, silver, all the types of minerals. And I really like this chart. If I zoom out, let me just zoom out to the daily chart. So this is what the chart's looking like. I mean, we fell off a cliff just like everything else recently, but kind of to bring you back up to speed a little bit on how I identify good buying opportunities is I'm looking for areas like this where the market finds a temporary balance, and we see between about April, May, the whole month of May, the market was kind of right here at $20 a share, and then for whatever reason, big money stepped in right here and dominated this price, and we see, the buyers sending this market all the way up to $31 from $21. So a $10 move in this market from May 24th to September 6th. So in about 3 months, a little bit over 3 months, a huge move, very aggressive, very powerful. You can see the angle of this rally compared to even the angle of this rally. This one's more of a 45-degree angle. This one is more straight up. So when this happens in the market, I identify this price level as a future buying opportunity. So it's almost like a leading indicator into the future. You see these lines extend all the way over here, months later, even a whole year later, all the way over here. The market has now fallen into this price level, and I'm definitely interested in being a buyer at this level. So you could take advantage of this level with options. You can buy the stock directly. I personally choose to buy options for a number of different reasons that we'll go into on a different video. I'll do a video specifically about options and why I like to use options instead of buying 100 shares of the underlying stock. But to talk about the entry point a little bit more, this looks like a great entry, and I would definitely take it as a buyer. But talking about great entry points, I definitely want to talk about risk and risk management. And on this position, it looks like a great buying opportunity. But no matter what the opportunity looks like, you never want to go all in on one position or over leverage yourself on one position, because despite what the chart looks like, the market could smash right through what you believe to be potential support. And it happens all the time. And, so you want to make sure that when you do buy in, you have an exit strategy. You can get out of that market the second that market breaks a significant low, because essentially what that's telling you is that the market was able to make a new lower low, and the definition of a downtrend is lower lows and lower highs. So if we see a significant lower low, we definitely want to be considering getting out of that market anyway. And the other reason I like to trade like this and identify these value prices is because a lot of people like to buy into the rally. They might see this rally happening and think that they need to jump into this market. But then, if you jumped in a little late on this market right here, you're experiencing some sideways action and then a downward pull, and that might force your hand to get out of that market with a loss. But understanding how trends work and how the markets kind of breathe, you're doing yourself a disservice to get in so high, because technically the market can go as low as the nearest significant low and still be considered an uptrend. So this market could pull all the way back here, never break a new low, but continue to rally, and this is still a good uptrend. So identifying areas like this give you the opportunity to wait for a very good value pullback, buy into this market, and see if you can catch a bounce to the upside. And like I said, you could be completely wrong. This market could smash right through your price, but that's where good risk management comes in. And just to give you a breakdown of the way I see a successful trading account going, is that every market, every trade can have one of four outcomes. You can experience a small winner, a small loser, a big winner, or a big loser. Any trade. So the key to trading is to eliminate the possibility of a big loser from happening in your account. And what you're left with is small winners and small losers, which would cancel each other out in your account for the most part, and then big winners. So if we can eliminate a big loser from happening, small winners, small losers cancel each other out, and big winners grow the account. So risk management is key. Just keep that in mind. And so we'll keep an eye on that market and see if we can get a good bounce back up to the 2850 level. So now going back, or you know what, before I go into this next chart, let me just zoom in on this candlestick right here, and let's see what's happening today. So this is the 1 minute chart, and it looks like we entered into this price zone, and we're getting a little bit of support here. Nothing too significant, but the market has gone sideways instead of going down at this price. So we are seeing a little bit of support here. What I do want to see is a nice little green pop to the upside, maybe a little bit of a pullback, and I would be buying for sure into this market, if not already buying into this market right now. So let's keep an eye on that one heading forward. The next chart I'm looking at is the SLV. This is a silver ETF. This chart follows the price of silver. It's not the price of silver directly, but it definitely follows very closely the actual price of silver. And zooming out on this chart to a daily, we see something very similar as all the other charts. In this case, silver has a substantial rally originating right here between 1400 and 1350. The market found some stability in price right here before being dominated by the buying side, and buying power pushing this market all the way up to 1840 per ounce. So it goes from 1340 to 1840 from May 28th to September 6th. So that is a $5 move in just a few months, and it's a very powerful move to the upside, as you can see here. So that tells me that these price levels down here are potential buying opportunities if this market ever pulls back into these levels, which it is doing that today. Now, to clarify, I might identify this as a good buying level, but this market might not ever pull back into this level. It might, pull back a little bit and continue to run, and I might not ever get an entry at this level. However, I am identifying this level as a good buying opportunity if this market ever does decide to pull back to these prices. I know that anytime in the future, I will look to be a buyer here, whether it's a short-term bounce or whether it's a longer-term buy. This price level gives me that future leading indicator, and I could even put a pending order down here and just let it go. And if this market taps me in, it taps me in. If it doesn't, it keeps on going, and it creates new higher highs and new entry points that I can identify down the road. But it's key to identify these levels ahead of time for days like this when the market decides to pull all the way into here and give you a very valuable buying opportunity on a market that was just at 1340 just a couple months prior, and has proven to show that it did break a substantial new high, and it did it in a very powerful way. So now this is like the pullback of a slingshot, and I'm looking to buy into these levels right here. If we zoom into this chart to see what's going on, the market is definitely taking a deeper dive into this price zone compared to these other markets that I showed. But we are getting a little bit of support. I wouldn't really call this too much support. So there's still a lot to wait and see in this market to see if we actually do catch some support here and get a nice little pop out of this level for good confirmation. Or if it just smashes right through and breaks our zone and we get out of this trade and look to readjust down the line. But silver is definitely a market of interest of mine, especially because the fundamentals for silver are really good considering the low interest rate policies and quantitative easing and the effects that that has on the money supply. I believe, that is going to lead to a higher price overall in a lot of commodities, despite what the actual physical demand for those commodities are. Even though silver is a great economic commodity and it is used and demanded very highly in a number of different industries in the United States and around the world. So we'll keep an eye on this chart here. We're currently at 1365. We'll see where we're at later today or even tomorrow or even next week. So, it's Friday, so tomorrow the markets will be closed. But moving into this chart, this is USO. This is U.S. Oil Fund. This tracks the price of oil, but it's not as closely related like the SLV is to silver. I don't know the exact details on why, but this is just one that I like to be in. I like to follow because if the price of crude oil is going up, I'd like to be able to take advantage of that in the markets to kind of offset the higher price at the pump that you're going to have to eventually pay. And, that's something that you can do in the USO. So looking at the U.S. Oil Fund, let me just talk about this one real quick. There is no significant support levels that I can identify going back many years in this market. I think this might be the lowest this fund has ever gone. I'm not exactly sure. I could pull up a longer term chart, but for the sake of time, we're looking at a market that literally had one of the biggest declines over the last few weeks. And that's something, in my opinion, it's going to be very temporary. I think oil is definitely going to be demanded. And I know that a lot of people will say that oil will suffer, lower demand because of coronavirus and people are traveling less and so on and so forth, which is absolutely true. But I do look above and beyond just the physical supply or demand for crude oil in looking at the price. And the other factor that I'm really weighing when it comes to pricing is the supply and the demand of the U.S. dollar. With a higher supply of U.S. dollar chasing the same amount of crude oil barrels, we can expect to see a higher price in the market, despite what the overall demand might be for that market. So crude oil is one of those things I just feel is way undervalued. I think that heading into the spring and the summertime, we're going to see a large spike in the price of oil. And this is a market where you can go in, buy a longer term call option and buy a call option into like September or October and just hold on to it and see what the price of crude does over the summertime. And if it increases, your option is going to increase in value. And it's just a great way to take advantage of rising energy prices and buying in, especially after such a crazy drop in price. I mean, the time to buy, they say buy low. This is low for crude oil. So That's just my opinion on crude. I do believe it's a great buy. We'll keep an eye on this price as it continues to go. And like I said, there is no price point where I can say it's going to stop here and continue to go up. I can only keep an eye on it and see what it does and make trades as we go. You could buy a longer term trade right now just to be in it, or you can zoom into the 1 minute chart and day trade this thing. And as we can see yesterday, crude oil just it found a sideways action, had some good buying power pops right here, and then it opened the day on a huge gap up, and it's now pulled back, filling that gap, finding its way into some support, giving us a nice little pop. So if you're day trading this market, it might be a good time to buy very short term, but we'll keep an eye on this one too. So those are just some charts I'm looking at right now. There's plenty of different charts I can look at. Let me know if you guys have any charts you want me to take a look at. Feel free to call me if you guys want to jump on a webinar or screen share. I'm more than happy to talk about the markets, answer any questions. I've been doing this for a very long time. A lot of people don't know. I started trading when I was 17 years old. So this was my original passion. And my vision for my life was to be able to travel the world and invest and trade in the markets and just go anywhere in the world with an internet connection in my laptop. So this was truly something I dove headfirst into as a young kid and into a growing adult. And it's something I'm very passionate about and very important. I feel that everybody knows a little bit about the markets and how to take advantage of the markets because now more than ever, it's critical that we have the ability to be nimble, the ability to have another source of potential income in a market and an economy like this. So that's that. Let me know what you guys think, and we'll talk to you guys soon. Take care.